Good afternoon. I am going to explain about banking. What is banking, functions of banking and bankers of bank. Let us see them one by one. First, bank. Bank is a financial intermediary. It is an organized financial institution. It mobilizes funds from the depositors and give it as a loan to the needy people. There are different types of banks on the basis of their ownership. The banks are central bank, commercial banks, development banks, cooperative banks and rural banks. The central bank is called the bankers bank. That is one of the main bank. Commercial banks. Commercial bank, its main objective is profit making. It takes money from the surplus unit by paying low rate of interest on deposits and lend the money to the needy people at higher rate of interest. And the difference between these two interest rate is known as profit. It is said to be credit creation. There are two functions of bank. First one is deposit mobilization and next one is loan function. Deposits may be classified into three types: demand deposits or current deposits, savings, fixed or time deposits. The fund may be obtained from various classes of people. They are pooled up together and the capital is formed. And the portion the bank did not lend the entire money to the loan, because a part of the cash, that is mobilized deposit, from the mobilized deposit a part of the cash is kept with the RBI. It is known as cash reserve ratio. And banks perform certain other functions also. There is custody, collect check amounts, purchase and selling of shares, debentures. They act as agents of their customers. For this, they charge fees from the customers. And functions of commercial banks. The commercial banks functions are: first one is acceptance of deposits. We know that there is the banks mobilize deposits from the customers in the form of savings bank account, current deposits account, fixed deposit account or recurring deposit account. The bank current account, for current account the bank did not pay any interest to the people because it is opened by business people. Overdraft facility is allowed to the businessman. For example, the businessman is having rupees 10,000 in his account, in the current account. He is eligible to take above 10,000 in their account. The above money they are taken by them is known as loan. So the customers, that is current account holders, have to pay interest for their extra withdrawings. And next one is savings bank account. It's a normal savings bank account. The people open bank account and save money and withdraw money at any time. And next one is fixed deposit account. The fixed deposit account, the minimum period of fixed deposit account period is 45 days. 45 days. The money is deposited for a fixed period. 6 months, 1 year, 2 years or 5 years. The deposits are not payable on demand. They are interest earning deposits. That is, after maturing a fixed period, the fixed deposits are returned to the customers. And similarly, recurring deposit. Recurring deposit motivate the savings habit among the people. Every month they save a fixed amount. After 1 year or fixed time, they will be returned to the customers with interest. These are the deposit types. Next one is advancing of loans. The second primary function is advancing of loans. So yes, the banks provide loan to the needy people. There are variety of loans: home loan, business loan, tractor loan, education loan, profession loan. So these are the loan types. They are offered to the needy people or borrowers. Cash credit. The bank opens an account of the borrower and allows him to withdraw the borrowed amount as and when he requires the money. This is known as cash credit. That is, the customer opened the bank account and bank allow him to withdraw the borrowed amount as and when he required. Overdraft facilities. The customer is allowed to draw checks in excess of their balance. We already discussed in the current account also. And then discounting of bills. Bill of exchange is drawn by the creditor and the debtor, specifying the amount of debt, and the bill may be expired, that is honored for a fixed period. After the fixed period, the bill is honored. In between this, the lender needs money, they went to the bank and discount the bill. On a maturity of the due date, the borrower repay the money to the bank. So, for example, Mr. X borrow rupees 10,000 from Y. Okay, Y is drawing a bill, X is accepting the bill, the Y hold the bill in his hand. The X promised that he return the money within 3 months, that is 90 days. 3 days grace days will be allowed. So in between this 93 days, Y needs urgent money means Y met the banker and discount the bill. So banker may give 9,750 or 9,800, that is bill discounting. On your maturity date, X repay the money to the banker, that is rupees 10,000. This is known as discounting of bills. And then facilitation of payment through check. Banks have provided a convenient system of payment in the form of check. Check is a principal amount of payment in business in recent times. It is convenient, cheap and a safe means of making payments. And then transfer of funds. Funds may be transferred from one account to another account, one place to another place, and from one person to another person. It is just like check, draft, mail transfer and telegraphic transfer. And then agency functions. Agency function means the commercial banks collect check, draft bill of exchange on behalf of the customers, and they make various payments on behalf of the customers, and on behalf of the customers the commercial banks purchase and sell the securities. They render agency services such as foreign currency services. It acts as trustees and executors. Apart from that, miscellaneous services. Commercial bank provide miscellaneous services, that is locker facility for safe custody of valuables, jewelry, issue of travelers check, gift checks, provision of tax assistance, now time ATM facility, mobile banking facility. These are all the facilities provided by the banker to their customers. Credit creation. It's a very important and unique function of commercial bank is that credit creation. That is the credit creation. By accepting deposit and granting loan, the commercial banks are able to create a credit. This means that they are not able to grant more loans than the amount of initial or primary deposits. For example, the bank is holding rupees 10 crore deposits means beyond the 10 crore deposit, it does not lend money. That is credit creation. And principles of commercial banks. There are some principles of commercial bank. First one is liquidity. Liquidity means deposits are made by the customers and the deposits are repayable to the customers at any time or on demand by the customers. That is, the customers are depositing money. As and when required, they approach the bank with withdrawal slip means it is the duty of the bank to repay the money specified in the withdrawal slip. That is known as liquidity. And then profitability. Yes, the main aim of banks, main aim of commercial banks is to earn profit. For example, the bank is accepting deposits at a rate of 4%, but it is lending money to the needy people at 12%. So the difference between the interest rate is a profit. And then principles of solvency. Commercial banks should have financially sound and maintain a required capital for running a business. Yes, capital is an important parameter. It is known as solvency. And while investing funds, banks are to be cautious about bank's money is a depositor's money. That is, the money deposited in the bank is not a bank's money. It is a depositor's money. And principles of collection of savings. This is a very important principle. Commercial banks always seek high amount of, there is large amount of idle money from the clients. So nowadays banks fix up the target of their customers to generate more savings from the people. And next one is principles of loan and investment policy. So the main earning source of commercial bank is lending and investing money on viable project. So the banks always try to earn profit through sound investment only. Sound investment means the investment which is able to be repayable. And principles of economy. There is commercial banks never go for unnecessary expenditure. They always utilize their own funds in a proper way. Principles of providing services. The better service brings great reputation for the bank. Each and every bank is a service institution which stand in the minds of the customer only because of providing services. Principles of secrecy. The commercial bank maintain the secrets of their customers. For example, one person is depositing money and withdrawing money means the details cannot be shared with another person. It is a confidential data. It is kept by the bank internally. That is known as principles of secrecy. And principles of modernization. Because it is a world of digital technology, so each and every one cope up with the digital technology. Bank is not an exception to this. The commercial banks adopt lot of of modern technologies for the benefit of the customers. Online banking, mobile banking, NEFT, RTGS, ATM machines. So these technologies are adopted by the bank for the convenience of the customers. Principles of location. Yes, commercial banks choose a suitable site where the availability of customers is large. When the customers need banks in a large area, so at that place bank should be established. Commercial bank always try to maintain good relation with their clients and potential customers. So the relationship between bank and customer is known as customer relationship management. Principles of publicity, because publicity is essential. For example, advertisement. The banks, even though it's a service oriented institution, it have to advertise their schemes in a various media. So by publishing their details in a mass media, it can get popularity among the people. These are the principles of banking. Thank you.